So guess who was wrong about the markets this year? Well, it turns out that all of the big banks, all of the big players were wrong in the forecasts of the market. Goldman Sachs, Citigroup, Bank of America all predicted 5 to 7% growth this year for 2024. Wells Fargo, JP Morgan actually predicted that the market would fall. And we're still in the first quarter, and what has the market done so far? Just talking about equities, leave alone crypto and Bitcoin, things that's going on over there. What is happening in equities? We're up 7% already in the first quarter of this year. So why are things going so well? Why is the market doing so well when all of the big players, all the big banks called for it to be kind of 5 to 7% or falling? There are 5 reasons why the market is so strong so far this year. We're going to go through each one of them. So the first one is strong economic data. Granted, there are problems in the economy, especially long-term and medium-term, but in the short term, the data is pretty strong. Outside of manufacturing and housing, which have some problems, the labor market has been strong. Low unemployment rate has boosted people's confidence, and the positive economic outlook has made them want to spend more money. So strong economic data, generally speaking. 2 is the Federal Reserve. Don't bet against the Fed. The Fed is something that everybody watches, and they have taken an accommodative stance. They have stopped raising interest rates. They have seen that the market is slowing down, that the spending is strong, that companies, especially tech companies, that are laying off people, which is what they want. They want to slow down the economy, and that's happening. And everybody is eyeing the Fed to see if they're going to lower interest rates, which all signs point to a lowering of interest rates later this year. So everybody is waiting for those cuts, and they're watching them with enthusiasm. Anytime there's an indication, even a slight indication from the Fed that they are going to lower interest rates, then the market goes up. A couple weeks ago, Jerome Powell said something indicating that they would probably start lowering interest rates later this year, and the market went up 500 points the next day. And then they backtracked that, and the market went back down. So the market is largely partially being driven by the Fed and the remarks from the chairman of the Fed and the governors of the Fed. Number 3, which you've probably seen and we've written about in Morning Download a lot, is the outperforming tech sector, especially the AI companies, the Magnificent Seven, the big companies that are doing so well, like NVIDIA, which has rocketed as the demand for AI chips, GPUs and others has been so strong as companies are building out their infrastructure so that they can run their artificial intelligence. So companies like AMD, Advanced Micro Devices, and Juniper Networks, and a bunch of others in the Big Seven, Magnificent Seven, have done well and have driven almost all of the gains in the S&P 500. The S&P 500 is made up, obviously, of 500 companies. And if you take out the 7 largest companies at the very top that have done so well and compare it to the rest of them, the other 493, it's night and day. All of the gains are being driven by those top companies, AI-driven and tech-driven companies. So number 3 is the outperforming tech sector, which some say is overvalued, some say is not, because AI is going to change the way we live and work. So it's 2 camps, whether or not we're undervalued or overvalued. Number 4 is consumer strength. As I mentioned before, the strong economic data is helping people feel more confident that they can spend. We have a strong labor market, and the consumer sentiment is optimistic. People are feeling optimistic about the future, economically speaking. And of course, not everybody, but generally a positive outlook. And so people are starting to spend more. On the downside, people are spending more, but they're putting more on their credit card. Credit card debt hit an all-time high, along with every other debt. So long-term, this is a big problem, not only for government debt, but personal debt and corporate debt. But for right now, people are still spending a pretty healthy amount every single month, which is driving the economy forward. And last one is inflation trends. So even though inflation has started to tick up, and it may continue to tick up, there could be some problems on the horizon. At least for right now, people are feeling better about inflation, comparing it to the 7 and 9% inflation numbers we were seeing months ago. Now it's in the 3% and possibly down into the 2%. So people are feeling more optimistic and feeling like that optimism outweighs the risk of an overblown or overvalued tech sector and possibly inflation rates going up in the near future. People are kind of overlooking the long-term and medium-term risks and feeling pretty good about the market, which is why the market continues to rise. So in summary, we've got a combination of a strong economy, supportive Fed policies. The Fed has slowed down the rate hikes and considering actually cutting rates. We have an outperforming tech sector. We have consumer strength and consumer spending and a positive or a better outlook on inflation. So what do you think about these 5 points? Do you think they're right? Do you think that we're just being overly optimistic and things are going to come crashing down? Give me a comment in below. Let me know what you think, where you think we're going to be going long term and medium term. And if you like this quick market update, then subscribe to the channel and like the video down below. And if you haven't signed up for the morning download newsletter, go to the link down below and sign up. Every morning in the inbox, we cover the markets and personal finance. Thanks. See you next time.